Hello, Uncle Jim here. I want to share with you today the fact that almost anyone can do what I do. I've been selling options for a number of years, and just in the last 2 years, I've been on a journey and I've figured out the right way to do it, at least the right way to do it for me. And I'm by no means anybody special. I'm able to earn a lot of money in a short period of time, and it's not difficult. What I want to do today, I want to share with you how to actually get started. I also want to talk about my trades that I did this past week where I made over $840 and go into a little bit of detail on those trades and why I decided to do them. But my real important point on this video is to share with you, you can also do this. Don't be fearful when you hear the word options. They're by no means as difficult as most people think. So stay tuned. I think this is going to be an important video for you. Thanks for tuning in. Now, you may be wondering, do I really feel that everyone can sell options? I actually do. I don't think it's that difficult. If you can own a brokerage and buy and sell stocks, you can definitely sell options. And I'm surprised not more people are doing it. But before you do that, you do need to get started. And to get started, you need to actually get approval with a brokerage to sell options. Now, if you don't have a brokerage account, it's not that difficult. You can look at Schwab. I prefer you not use Robinhood, but if all else fails and that's what you want to use, you can use Robinhood or you can use, one of the other brokers, Interactive Brokers, Tastyworks. So there's a lot to choose from, and all of them I believe will allow you to open up an account for free, and you can actually fund it. Put a couple $1,000s in there, or even a couple hundred if that's all you have, and then set up that account for approval. Now I'm going to add a video up above, a link to a video up above on how to get approval with Schwab, and it pretty much works in a similar way. You can actually do a lot of this over the phone. You will have to say, well, I'm getting started, and you do have to talk about what kind of trading experience you have, but it's not that difficult to get approval, at least for covered calls or the lowest level. There's many levels of approval for doing different types of options. Now, I primarily do safe options or options that are less risky. So I will include that video up above. And again, it's not that difficult. Once you have approval and you've got your brokerage account set up, then I encourage you to sell a covered call. And I would stick, if you don't own any stocks, if you have a stock and you have over 100 shares, then you can probably sell a covered call on those shares. Now, for those of you who are completely new, what is a covered call? Well, a covered call is when you sell the opportunity for someone to buy your shares at a certain price. So they'll be willing to pay you money for the opportunity to buy your shares. Say, well, let's use AT&T as an example. AT&T is a great company if you want to get started. It's inexpensive. I believe it's $18, but you could say, well, I'm willing to sell it at 22, and you can sell a covered call at 22, and someone will pay you some premium for that opportunity to buy those shares. So you can change the risk, you can change, and the risk relates to the more risk you take, the lower the price. So you'll get more premium. Say you want to sell AT&T at 19 versus 22. At 20 would be a little less risk, 21 even less risk. So the higher you go in the price, the less risk you take, and the less chance that you have of actually those options being assigned. And what is assignment? Well, assignment is simply that person who bought that call option, they have those shares assigned to them. So if the price goes above what's called the strike price, the price that you're willing to sell those shares at, then they'll call them away from you, or they'll be assigned away from you to that individual. Sounds a little confusing, but once you've done it once or twice, it's not that difficult. I also have a video on that, and again, I'll include a link up above and actually in the description too. So I encourage you, pick an inexpensive stock. Again, AT&T is good. Ford's another good one. You could look at Ford's inexpensive, or Lumen, Lumn. Another good stock to get started. It pays a really good dividend, almost 10%. So those are three example stocks that you could get started, and you would need to buy 100 shares to start that covered call. But I'm just kind of keeping it basic here. I encourage you to look at one of these other videos if you want to dig deeper once you say have the account open. Next, what I like about the way I trade is I do market trades, and it makes it very passive. So with Schwab, a market trade is I'm not setting a limit. I'm not setting that I want to earn a certain amount. I just say, well, I'll take the market price for that option, and it allows me to say, hey, I want to sell this right now, and I want to make the income, and I put it as a market trade, and voila, it occurs right then and there, and I move on to doing something else. That's how I'm able to do a couple trades in a couple hours and make really good money with it. And what's interesting about Schwab is they have what's called price improvement. So if they can, they will increase what you get with doing that trade, and it also occurs when you're selling or buying stocks too. But they'll actually note it in the status report that hey, you got price improvement. And I've noticed 70-80% of my options that I sell, as well as my stocks, if I buy or sell something, I also get improvement, which I really like. So setting it as a market trade, it has allowed me to go on and do other things. And again, I talk about that in that same video where I show selling an option. I talk quite a bit about price improvement and how it's worked out really well for me. And then one other key factor for me that's made a big difference with my options trading is you need to be patient. So if you want to sell a covered call and the market's down, you need to wait for another day when the market's up. Typically, covered calls pay better premium on days, when the market's up, or if they have really good earnings. So, well, let's use AT&T as another example. Say AT&T has earnings and the earnings are really good. Well, that stock's going to go up quite a bit, and it's again a good time to actually sell options for AT&T on an up day for AT&T. Maybe the market's down, but AT&T is up. And later after you're done with covered calls, you can look into the next a little bit more difficult part of selling puts. And puts work in the opposite way as calls or selling covered calls. When the market's down quite a bit, you can actually sell puts and make good income. But I'm not going to go into a lot of detail with that. I will talk a little bit when I talk about my trades at the end of this video, which I did. I did two puts. They were vertical put credit spreads, but they started out as cash secured puts, and I decided to do them as put credit spreads. But that's getting a little bit too wordy and too difficult. Let's keep it simple. If you are starting out, and just go ahead and just do a covered call, and you later can research additional stocks. I have plenty of information again on my YouTube channel, as well as my blog, my easyinvestingincome.com blog. And I also have a Patreon memberships where I share my trades. I share every week, the beginning of the week. I actually provide 4 trades, 4 different companies, and I provide, why I'm looking at them. I also provide what delta they are, meaning what risk they are, what strike price I'm looking at, what expiration I'm looking at, and I do that every Monday, and I provide 4 trades that I'm looking at. I've actually done 2 of those trades this week, so I'll share again at the end of the video. I'll share that in more detail. So take a look. It might be something you're interested in, and details will be below. And as always, please swat that like button. It does help with pushing these videos out with the YouTube algorithm. And please subscribe. I'm a growing channel, and I'm trying to get the word out. I want people to understand that the selling options is not that difficult, and you can also do it, and it might impact. I've reached financial independence sooner than I ever thought possible. I'm 56, and I could retire right now. I'm still doing some development work, but I prefer just to do this full time. So that's enough about that. Let's jump into the next part of this worksheet, or into the actual this week's worksheet, which is the August 15th planning worksheet that I released on Monday morning. I typically will release these to my memberships usually either Sunday night or Monday morning, before the market opens. So stay tuned. Let's jump into the next part of the video. Okay, I've opened up this week's planning worksheet. This is the one that I released this past Monday morning. And at the very top, you can see this is my favorites. These are my trades that I was looking at the beginning of the week, and I actually made two of them. But like I mentioned earlier in this video, I release this every Monday or either Sunday afternoon or Monday morning, and typically there's four trades. And here you can see I talk about what kind of trade. You got what company, Cisco, um, Alley, which is a finance banking company. Then you've got Truist TFC, which I did sell I did make a trade in it, which I'll share down below, and then Buckle BKE, and I actually closed an existing position and opened up a new one. So in a way, I rolled it, but we'll talk about that in a minute. But I talk about why I like the companies, good dividends, good financials. I talk about the expiration day, the delta that I'm looking at, which is the risk. The higher the delta, the higher the risk, and how much premium I think I can make on one contract. Typically, this is referring to one contract. In a lot of cases, I do two contracts. So let's actually jump into the trades. Um, One I still have not done anything with is a BP related trade. So right now it's an adjusted trade. So this one I may let it expire even though its current value is higher than the strike price because it was adjusted. I believe it's in the mid 30s, so this will probably expire out of the money. So, or I may try to close it before Friday, end of day. So, but BKE, this is Buckle. They're a great company. They were out of the money. I closed this one earlier in the week and the current price was around 30, and I believe I closed it for, let's see, I think it was $4. Yeah, $4.65, 65 cents being the expenses for the trade. But I closed that earlier in the week, and then you'll see down below I actually opened up a new vertical put credit spread, and I did it at a slightly higher strike price, 26.85. I believe it was 26.85 and 16.85. I don't know why I didn't put both in there, but it's actually two strikes since it's a vertical put credit spread. So the 26.85 is the short where I picked up the premium. Then I also bought the 16.85 put, which made it a vertical put credit spread. It expires on 1/20/23, and at the current time it's priced at $33, a little bit above 33.39. So it's quite a bit out of the money, and I picked up 200 and what is that, 200 and almost $250. So not bad. And my guess is what'll happen, same thing will happen is the one above it that I closed earlier. My guess is it will go up quite a bit, and hopefully I can close that with a really good profit way before it ever expires. So the next is this is a covered call in HEDG, which this is a European hedge fund related ETF. And I've been rolling it. This is probably the fourth or fifth time I've rolled it, and it was expiring on 8/19. It's currently around 70 and 754, and I rolled it to February 17th, so about 6 months, almost exactly 6 months. I kept the same strike, so I kept the same strike at $75, and I picked up $215 for it. So I've been able to sell usually two of these a year and more than double the dividends. That's another good rule of thumb, is that you're doing pretty well with covered calls if you get more than double what the dividend would be. So I believe it pays a little bit over 3.5%, maybe pretty close to 3.5% dividend. And so it'd be like a 7%, cash dividend, or I earned 7% cash on it every year, which isn't bad at all. So let's actually come back over here. Then I did do a KO, a Coca-Cola covered call, and I rolled it out from, actually it was expiring on September 16th, and I rolled it out to, I believe, February 17th. So again, 6 months. And same idea with Coca-Cola. It pays a little bit over, or right around a 3% dividend, and I picked up $156. And I found the same thing with Coca-Cola. So, again, a good rule of thumb is you can double your dividends with covered calls. And I think I typically do a little bit better. I probably somewhere in between double and tripling what the dividends would be, which is, that's enough to live on all by itself. If you've got, say you've got $1 million portfolio and you're getting a 3.5% dividend, that's like 7%. So that'd be like $70,000 or $80,000, not including Social Security or anything else you may be earning. But I do a lot with Coca-Cola. I've shared in previous videos. I've inherited a lot of Coca-Cola when I was a kid, and I'm going to end up passing probably all these shares to my son. So I'm living off the dividends and selling covered calls on Coca-Cola. And it's worked out really well for me. Coke doesn't move a whole lot, so it's relatively easy to sell covered calls. And it's been many years since I've had any get assigned. So you can roll them if they ever get in the money. And I've not recently, and recently being the last 3 years, I've had no issues with rolling any of my Coca-Cola. So here's Buckle. I've mentioned that before, the vertical put credit spread, so I won't talk about that again. And then the last trade is Truist, and I did this. I actually did both these new trades yesterday, and I sold, I believe it was a 45.35. So the short was a 45, or the put that I sold was 45, had a $45 strike, and the one that's farther out was 35. So I only needed for each contract $1,000 or so, and I was able to. Well, it's currently at 51, so 51.40. So it's pretty far outside the money, and I picked up what is that, $225. And Truist is a company that I really like. It pays over a 4% dividend. They've merged recently with BB&T, and their revenue is growing quite nicely. Also, their cash flow. Their earnings have been down a little bit, but it's partially because they're just getting done with this merger, and a lot of their expenses are going to come down. So I feel like it's a really good buy. And at 45, that's pretty near their 52-week low, and I think their 200-day moving average is like 52, 53. So I feel really good about Truist. And all these trades, again, I did these as market trades, and was able to get in and out quickly. I probably spent, like I said, 3 hours, probably not even 3 hours, probably more like 1 or 2 hours. Part of the reason I spent 3 hours is I share the information with my memberships. I also enter it into this spreadsheet. If you weren't doing all the things I'm doing related to my YouTube channel and trying to share with other people how you can make these trades, I probably could have done it in even less time. So, these are the trades that I did this week. I'll probably do one more. It's what my guess is. So it's one of my best weeks so far this week. Like I said, I did. If we come down and we go over, yeah, I've done, what is that, $842.65. And there you can see based on the 3 hours of time I spent. And so far, let me move this out of the way. My goal is 600 a week, but I'm well over that. I'm, doing 840, and I'm at 2359 for August already. And I've got at least 2 more weeks, so it may be one of my best months ever. And then overall for my portfolios, I'm pretty close to where I was a year ago. So even with the bear market, I've almost completely recovered. And that's with living off a lot of expenses. I pay for a lot of my living expenses from these brokerages. So that's it. I hope you enjoyed this. If you have any questions or about the trades or anything related to or anything in this video, please add a comment below. I answer all my comments. It might not be instantaneously. Sometimes it might take me a couple hours, but I've been 100%. I've answered all my comments. So I hope this helps. I hope you enjoyed this, and please come back. Thanks for joining me.